Ladies and gentlemen, good day and welcome to the Gujarat Narmada Valley Fertilizers Company Limited Q3 FY2023-24 Financial Performance Earnings Conference Call. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anurag Alakhandi from Anurag Services LLP. Thank you and over to you, sir.
Thank you. Good afternoon. On behalf of Anurag Services LLP, I welcome the management of Gujarat Narmada Valley Fertilizer and Chemicals Limited for earnings Concall. From the management, we have Mr. D.V. Parikh, Executive Director and CFO, Mr. Vayan Patel, Head of O&M, Mr. A.C. Shah, General Manager and Company Secretary, and other senior members from the management. We will begin the call with the opening remarks from the management, post which we will have a question and answer session. Thank you and over to you, sir, for opening.
Yeah. Okay. Good afternoon. Good afternoon to Anurag Services for holding this call and warm welcome to the participants. On the industry scenario, if we start with, there are results which are declared by different companies, both domestic and international, and the results are subdued in nature as compared to the last year as well as quarter on quarter. Basically, if we talk of fertilizer and chemical, both the industries are impacted. The fertilizer industry is impacted mainly because of substantial reduction in the complex subsidy levels, even if the operations are stable in most of the units. Apart from that, if we talk about urea as a fertilizer, urea has been suffering with under-recoveries of fixed costs since quite some time. And there is some sort of energy under recovery also in that business. So overall fertilizer industry is getting impacted because of this reason. As far as chemicals are concerned, the margin pressure is observed mainly because of the impact, disproportionate impact rather, on the realizations as compared to the inputs. Also both have gone downward. The proportions are different, which is impacting most companies including GNFC, as the case may be. The key highlights of quarter 3 would be, like in case of GNFC, it has completed the buyback with a response of close to around 3 times, which is 300%, and with extinguishment of around 8.4 million shares. Now the share capital is reduced by a factor of around 8 lakh plus shares. 84 lakh shares, I'm sorry. And it has changed the composition of the shareholding pattern of promoters, which was earlier 41.18, which has gone up to 41.3% for both the promoters taken together. During the quarter 3, the long-term settlement also is arrived at with the employees, and the same is settled with a minor impact since most of the amounts were provided. Apart from the margin pressure, what is unusual in this year, this financial year, is there has been a shutdown which has created an impact both on the top line and bottom line, which is substantive because the days were close to a month in early April. So this what has impacted. If we talk about the operation from chemical perspective, the production levels have been little lower as compared to quarter 2. Whereas if we compare with quarter 3 and YOY basis, quarter 3 the production levels are higher, and on a YOY basis the production levels are lower mainly because of the shutdown. In case of sales, there has been the stock built up at the end of periods because of which the sales overall are affected. The inventories are increasing, mainly that of TDI, which was the highest at the quarter end if we compare the last 3-4 quarters. TDI, as far as production part is concerned, it has done extremely well. especially the Dahej plant. There is a reliable production which has exceeded the annual production of last year. In terms of the financials, it is before you. The financials as well as the press release is shared yesterday and loaded on the stock exchange, followed by the presentation. So number part will take more questions rather than elaborating on that. With this, I close my opening remarks and invite the questions from the participants. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets only while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants may press star and 1 to ask a question. The first question is from the line of Nirav from Anvil Share and Stock Broking Private Limited. Please go ahead.
Yes, sir. Good afternoon and thanks for the opportunity. I have a few questions. So, sir, first on the TDI plant, I think last quarter you mentioned that that plant was operating at optimum levels. Even this quarter, the plant have exceeded our expectations. So, if you can just share the sales number for both the plants separately till 9 months of FY24.
Hello. Mr. Manish Upadhyay, if you can please respond to this query with sales numbers.
Okay. Total figure, I'm just giving it a moment. 50, April to December, total 50,800 tons we already crossed. Last year it was almost 37,000 tons. So this is a total. And in the Dahej, we almost crossed almost 60,000 tons so far.
Sorry, sir, come again. For Dahej, how much it was?
Dahej, up to 1 minute.
I'll tell the figures.
Production is 55,000 tons. 55,000 in 22, 61,000 in 23.
Manish bhai, the question is on sales.
The sales is almost 59,500 so far.
50,500. So, balance is from the Bharuch plant. So, total production, total sales is 58,800, of which Dahej is 50,500 and balance is from the Bharuch plant. Correct? Hello?
1 minute. Sorry. Figure is... Total figure is...
Manish bhai, let me cover.
44,400.
Total sales is 51,000. Divided into 2 parts. Bharuch is 13,000.
Okay.
And Dahej is 38,000.
Okay.
These are the numbers of sales.
Got it. And sir, last time you mentioned that the losses from the TDI on a half-yearly basis has narrowed down to 95 crores. So, how much it was now for 9 months of FY24?
See, the total losses has gone down by half.
Okay. So it is now 47 crores. So, for 9 months.
See, for 9 months, there was a loss of more than 350 crore last year. It has gone down half.
Okay, it is now 175 crores. Correct. Sir, second question is on our power and fuel costs. So, when we see our quarterly results, I think it is around 400 crores run rate. Last quarter, it was also on the similar lines. So, if you can just help us explain what feed we actually use for the production of chemicals, like is it the same which we use for the production of ammonia for our chemical business, like the fuel oil which you mentioned last time? And if yes, how much do we annually consume fuel oil for our chemical business for the power and fuel part?
For power and fuel part, practically no fuel oil is used.
Okay.
For power and fuel, there are 3 sources. One is coal-based facility, second is the gas-based facility, and third is the import of power, which is from the state electricity grid. Depending upon the operational and financial feasibility, we operate within these three lines. The total requirement of power and fuel range is little about 50 megawatt per day, and the mix is decided based on the cost and reliability part of it.
Okay. Sir, you mentioned 15 megawatt.
50 plus megawatt. It ranges depending upon the production level between 51 to 55.
Got it, sir. So let's say the coal cost is currently trending down as per the presentation. So even if you share the figures for 9 months, what was the mix in terms of our consumption of power for these 9 months of FY24? That would be helpful, sir.
What exactly do you want in terms of?
Sir, this 50 megawatt of consumption which we require on a daily basis for our chemical production, if you can just break it down in between coal, the natural gas and the power which we purchase from the grid.
It is approximately 1/3 each, you can say. Hello, I'm Yogesh Patel answering your question. Yeah. As Mr. Parikh has narrated, we do variation based on the variation in the rate of fuel as well as power we draw from, JETCO grid. But approximately you can take 1/3, each component.
Correct. So, sir, when we see our presentation, I think you have been showing the data for oil, natural gas and the imported coal. So when we see, let's say Q1 of FY24, the natural gas cost was like 41 rupees and the coal price was 12 rupees, which is now also at the similar levels, more or less. But when we see our power cost, Q1 was like 340 crores and now it is at around 400 crores. So is it because of the increase in the production of chemicals, this increase has happened, or because of the higher consumption or higher takeoff from the grid that has increased our power cost?
No, as compared to Q1, there was a shutdown. So the consumptions were less.
Okay.
If you compare Q1 versus any other quarter, whether Q2 or Q3, you will find a difference because of the shutdown period.
Okay, got it. And sir, the last question before I again join back in the queue. What was our ammonia production in 9 months of FY24, and if you can just bifurcate between how much was meant for urea and how much was for chemicals?
Ammonia production, if I give you figure up to December, it was 463,512, out of which, gas base was 272,000. Okay. And oil base was 191,000.
Okay, sir. Okay.
Normally 60-40 ratio is there.
Got it, sir. Thank you so much, sir, and I'll join back in the queue.
Thank you. Participants may press star and 1 to ask a question. The next question is from the line of Atul from ICICI Prudential AMC. Please go ahead.
Thank you for the opportunity. So basically, just wanted to check in terms of current scenario, if one has to think, is this kind of margin pressure likely to continue, or they have bottomed out across most products, and is it okay to assume that probability of further margin decline is low, if just to get a sense on
Manish Upadhyay can reply from main office, head office.
I'm Manish Upadhyay. Yes. Actually, quarter 3 was not that good because normally quarter 3 should be a good, but this year quarter 3 was facing problem of the margin as well as the selling. Of course, sales was quantum-wise almost same was there compared to the previous month, but margins were down because of the high input cost as well as the lower selling price. Price has started going up from December onwards. It has already started almost all product. Now we have reduced our inventory considerably, and we are able to increase price since last one and a half or 2 months time. So we are hopeful that this quarter will be definitely better than the last quarter.
Adoshas, do you have any more questions?
Thank you so much.
Thank you. Participants may press star and 1 to ask a question. The next question is from the line of Nirav from Annual Share and Stock Broking Private Limited. Please go ahead.
Yeah, sir, thanks for the opportunity again. Sir, you mentioned that our fertilizer business was affected because of the reduction in the subsidy rates. So in last of our interaction, you mentioned that because of the higher fixed cost, urea business incurs a loss of around 65 crores on an annual basis. So when we compare 9 months of FY23 and 9 months of FY24, last 9 months were profitable. So was it because the other fertilizers were doing well in terms of the profitability and urea was suffering, and this year those profit numbers have turned negative because of this reduction in the subsidy rates? Is it a fair assumption?
This is Manish Miller responding to your question. See, more or less the urea continues to make losses because of those recoveries explained by Mr. D.V. Parikh earlier in his note. These are other fertilizers which were giving us some kind of a profit. Though we had quantum-wise a little less as compared to the Q3, year till date December for the previous year and this year when we are having this conference. Yes, your assumption is correct, and it is like that we have made a little profit in our other fertilizers which falls into the category of NPK or complex fertilizers.
Okay.
And the subsidy revision which has taken place effective from 1st of January 2023, retrospectively announced later in the next financial year, and again with effect from 1st of April. So these are the two facts contributed to the losses this year. Put together, we look the fertilizer segment as.
Correct. So because when we see our current 9 months, the PBIT loss is 191 crores. So even if we exclude the urea loss, the losses have been higher. So is there any one-time inventory hit which we have taken in this 9 months, and what could be the sustainable or a repetitive quarterly loss figure which we could continue to report based on the losses on the urea side?
See, the urea remains unchanged, and we cannot ignore the inflation in between which has been taken place. We have increased our manpower cost because of certain decisions taken by the management in terms of remunerations to the employee. This is what has also contributed to it. And another is this, that major part can be assigned to the NBS subsidy which has been given. Going forward, this fertilizer business per se depends upon the feasibilities what we are having, looking at the nutrient-based subsidy scenario and the fixed cost subsidy revision in urea. So this has been the case for GNFC for quite some time now.
Correct.
Yeah.
Sir, second question is on the contribution of top 3 or 4 products this quarter in terms of the sales. If you can just highlight us, or let's say in terms of even profitability, if you can just highlight for this quarter, and or let's say even if for 9 months, that would be helpful. For this 9 months or quarter 3, whatever is convenient. So what were the top 3 or 4 products in our portfolio which has contributed to the sales as well as to the profitability?
TDI, weak nitric acid and acetic acid. These are the top contributing products in terms of contribution. TDI in terms of sales as well.
Okay. Because the TDI losses have reduced, that's why the contribution to that extent have gone up, right?
Yes.
Correct. Sir, last question is on ammonium nitrate. So, how has been the situation currently? Because last year I think that was also one of our profitable products, And if I'm not wrong, last year we produced or sold close to 1,97,000 tons. So if you can just help us, what was the production numbers of ammonium nitrate for 3Q as well as for 9 months, and the outlook on that business, sir?
Wait a minute, I will tell you the production number this year. But sales part, Manish can cover up.
Production number for quarter 3 is 35,000 tons, as compared to 41,000 tons in quarter 2.
Okay.
9 months. I'll tell on 9-month basis also what are the production numbers.
Okay.
The AN melt is 116,000 tons as compared to 153,000 tons in 9 months last year.
Okay. So, sir, to that extent, probably our weak nitric acid consumption into AN melt would also gone down, and that extra WNA we have to sell in the market.
No, not necessarily, because last year the AN melt was different quantity because of certain product mixes. Okay. And what happens, AN melt, we have two routes. One is co-producing it along with the ammonium nitrophosphate, and also independently produced irrespective of ANP. So it's not necessarily that it will save, but in general, if we run it independently, then it saves WNA, yes.
Correct. And sir, on the timeline of our capex is like the 50,000 ton ammonia plant, 1,63,000 tons of AN melt plant, and 200,000 tons of WNA. So if you can just walk us in terms of the timeline for commissioning of this capex, and of the total capex, how much we have spent till date.
I'm Vayan Patel answering your question. Out of total capex, right now the committed expenditure are only for two projects. That is 4 megawatt power plant and coal-based power plant at the Dahej complex. That is 613 and 23 crore. That is already committed expenditure, and this ammonia expansion, 225 crore are committed.
Okay.
Right. For weak nitric acid and ammonia melt, still, investment decision is not there, but, we are likely to conclude that within next 2 months or so. And the completion for this project will be around 26, mid of 26.
Mid of financial 26.
Yeah, 26.
Okay. And sir, how much we have spent till now on this?
No, we are yet to spend anything on this weak nitric acid and AN melt.
No, I am talking about that 4 megawatt plant as well as...
megawatt project, most of these, I think around 20 crore, more than 20 crore we have already spent. And this
ammonia.
Ammonia we have only spent around 30 crore so far.
Got it, sir. And sir, even when these projects are finalized for both what you mentioned, what sort of capex we are looking on for both these projects put together?
This project will be consuming around 1,200 crore.
Okay.
I'm talking about weak nitric acid and AN.
Yeah, correct.
Yeah.
And sir, last question, if... hello?
Yeah.
So last question, if you allow so. Sir, what was the production and sales number for WNA and CNA for quarter 3 as well as for 9 months?
Production
for 9 months it is 324,000 as against 328,000 last year.
Okay. And for concentrated nitric acid, sir?
105,000 versus 81,000 last year on 9 months.
And CNA out of this, some portion would be consumed for our nitrobenzene plant. Rest for nitrobenzene as well as TDI, well, rest would be sold in the market, right?
Yeah. Yes.
So if you can just let us know what was the sales figure for CNI, that would be helpful, sir.
Manish Upadhyay speaking. It is around 37,500 ton roughly, approximately.
Okay, this is what we have sold in the outside market.
Yeah, within 9 months time.
Okay, sir. Thank you so much, sir, for the opportunity and all the best.
Thank you. Just a reminder to all the participants that you may press star and 1 to join the question queue. The next question is from the line of Rusmik Oza from 9 Rays Equi Research. Please go ahead.
Thanks for the opportunity. So I just wanted to understand, how FY25 would play out, because much of our capexes are, as you mentioned, are coming up in FY26. And this year the margins, especially in the fertilizer business, have got impacted severely. So next year, based on your internal assessment and based on the pricing visibility that is there, will we see, a year-on-year growth in terms of both revenue and profitability in FY25 as compared to FY24?
Manish.
Can you repeat the question, please?
I wanted to get an outlook on FY25, considering, that this year has been quite disappointing in terms of, margins, both on fertilizer and chemicals. Will there be any cost-cutting measures you are taking to improve the profitability next year? Because considering that a lot of your capex are fructifying and coming in FY26.
Patel Sahib, you will answer?
No.
It was related to capex.
I wanted to understand the growth actually.
We don't have, we have not, initiated any cost-cutting measure. For capex, we don't need to, go for that. But for margin part, I think Manish can throw more light on pricing and, margin on chemical segment.
I'll just give you the outlook of the chemical side. As I talked to you, from December onwards, prices started going up. Last year, ammonia price was on higher side, so we got advantage of the ammonia-based products like nitric acid, CNA, WNA, ammonium nitrate melt, as well as the urea. These 4 products are dependent on the ammonia. So all these 4 products scored very well last year. This year, price has gone down almost to 50% of that level compared to last level. So this has naturally affected our sales realization as well as the whole sales price. Now it is coming back to the normal. Of course, ammonia price is under stabilization, and now it is almost steady since last couple of months or 2-3 months time. We are hopeful that